Hey, good evening. Tony LaPorta here with NakedTrader.com. It is Wednesday evening. We all saw what Bernanke got up to today. But before I start, I'm in Winona, Minnesota, where my children live. I'm collecting my son Louis, who's a senior in high school. And tomorrow, late morning, early afternoon, we are headed for Milwaukee, Wisconsin. And Friday, we're doing a tour of the University of Wisconsin Milwaukee, which is downtown Milwaukee on Lake Michigan. And more power to him. I hear it's a very, very nice campus, so we'll be having a look on Friday. Uh, with regard to the markets, I'm still long the indices. I bought those on Monday, and as I wrote in my commentary, I'm keeping them till Friday. They're better after hours again. I bought the grain markets here this afternoon, and took a little bit of financial heat on them, but making that money back after hours. We will see where they open in the morning, but obviously the weak dollar has brought a bid back to this sector. And the treasuries, I've been short those for a couple of days and made realized good profits. Still not making money on them, but got quite a bit of money back today with the correction in the treasuries. I'm a little bit surprised on how they are squeezing themselves back up higher after hours. So one thing I could tell you is a technical formation that I spotted. As most of my readers know, I'm not a big fan of candlesticks, and the reason, probably the main reason, is because I'm colorblind, and most candlestick charts are done, most market charts and everything are done in red and green. Well, those are not good colors for me. So while I was in London, a friend of mine, Clive Lambert, gave me a book that he wrote on Japanese candlesticks. I struggled through it because him, like others, had used red and green. But the nice thing about the book, it has a little candlestick cheat sheet on the front page. So what I've learned about these is some of the reversal patterns, and what I saw today was what they call in Japanese candlesticks a bearish engulfing pattern, and that's when the previous day you have a market that opens up near its lows and closes near its highs, so that's a bullish candle. The next day, which was today, the market opens up on its highs and closes on its lows, and that's a bearish candle, but the bearish candle is larger. It engulfs the bullish candle, and that is, technically speaking, from Japanese candlesticks, a very bearish formation. So as I wrote my commentary, I've been sort of bullish these bond markets for since the beginning of the year, and George Cavaligos, I am coming to your side of the fence. I do believe that the next leg lower has begun today, and we will see if we get this follow through tomorrow. I am looking for a significant move lower here over the next days, weeks, months ahead. So this is a very bearish formation, so we will see if it plays out. Besides that, I mean, everything else is looking good. There's no reason for me to panic on my indices. They're higher after hours, and they are, if they maintain this bid, they will gap open higher, and if those gaps, like I wrote in my commentary, if they're not filled within the first hour, look out. It could be a big day to the upside tomorrow. So I wrote, the last 2 days, while the money has sat on the sidelines waiting for the Fed announcement, Wall Street has quietly added 210 points. The Dow's up 210 points. If we gap open higher and we don't fill those gaps within the first 30 to 45 minutes, we could be another 210 points higher tomorrow. So that's my call. It's my job to have a view. I'm very, very bullish these indice markets for all the wrong reasons. Tony LaPorta with NakedTrader.com signing off. Cheers. Good luck tomorrow.